this is selfish to say, anything that I do that's half decent takes a lot of time, whether it's preparing for an interview, preparing for our show in the next morning, working on the newsletter. It doesn't just like, it's not a natural act for me. I have to study, I have to prepare. So it's not the whole idea that you could just like bang, bang, bang from one thing to the other and that they'd all just like, you could just sit down at any moment. It would just be awesome. It's just so not true for me.
I feel like that's very refreshing to hear because I feel like your brand is this prodigy who landed at the New York Times at like age, what was it, 17?
18.
18,
yeah.
But it hasn't been easy come.
No, not easy. No, nothing is easy. Writing is not easy. And, there's certain writers, I see them even at the office today who, and I have visions of Michael Lewis like this, playing the keyboard like a piano.
Yeah.
I do not play the keyboard like a piano. People who just sort of like sit there cackling to themselves in such enjoyment writing, it's not my way. I'm sort of in pain most of the time.
Is it actually painful for you when you're writing?
Totally. Yeah.
Is it more or less painful than your very bougie dentist office that has a massage chair? Before we started taping,
yes.
Andrew Ross Sorkin disclaimed that he lives a fancy life.
I have the greatest dentist. When you go there, I'm going to get in trouble for saying this. I mean, people are just I'll be lambasted.
Yes.
You lie on a massage table and they clean your teeth while you're lying there. But I'm going to make it crazier. You ready?
What do they do? Shampoo your hair?
If you want, for an extra fee.
Is there a happy ending? I'm just kidding.
No, but close.
What is it?
They will massage your feet.
No.
No joke.
You let a dentist who touches people's feet touch your teeth?
Different person. One person cleans your teeth. The other person massages your feet. And because you're focused on your feet, you don't focus on them doing all the crazy things in your mouth.
Oh
it's
my God.
Unbelievable.
Andrew. I don't know. I feel like this is something that
I've just lost all credibility.
You were so disarmed by the podcast name that
See,
you just
it
revealed
worked.
your deepest
it
secret.
Worked.
See,
I just gave it to you right there.
That's it.
Right there.
Andrew Ross Sorkin of DealBook fame.
Smart girl. Dumb questions.
Is 2026 going to be a year of a market crash? I'm Nayeema Raza. This is Smart Girl Dumb Questions. And today my guest is the prolific journalist, Andrew Ross Sorkin of New York Times DealBook and CNBC Squawk Box fame. Andrew, thank you so much for being here.
Thank you for having me.
It's so prolific that you've given us TV shows like Billions or the book Too Big to Fail, which was made into a film. And this book, now a New York Times bestseller, 1929.
Thanks.
It's great. It's actually a great book.
It's actually a great book. But
It's actually
thank
a great
you.
book.
I'll take it.
By the way, I hate having people on book tour, but I really enjoy this book.
Thank you. I appreciate it.
And did you know it was going to be a hit as you were toiling away for 8 years?
I didn't know if it would be a hit. I thought there was like a relevancy to it. I didn't know when I began all the things that were going to happen in our real world, by the way, that are so bizarrely parallel to now or back to then. But I thought the more I got into it, the more I thought, yeah, this is like a yarn and these are some great characters and you can really feel them. And so I was hoping, but you have no idea.
So for people who are like, what the hell happened in 1929?
Yeah.
Give us the headline, the deck, maybe the lead of 1929.
Okay. Backstory is 1920s, probably the craziest decade of the last, frankly, several hundred years. I would actually say the modern America that you live in today is largely a function of the 1920s. Automobiles come of age. By the way, Charles Lindbergh planes are coming of age. Radio is coming of age. So there's sort of this excitement about technology. All of the buildings you see in New York City were built in the 1920s. Chrysler Building, Empire State Building, the Waldorf Astoria actually moved to Park Avenue, 230 Park Avenue. If you ever drive through that building, when you're driving towards Grand Central, like literally physically through a building.
Right. Oh, that was like that little.
Yep. 1929 as well.
Okay.
So it all happened then. And layer on top of that, the idea this was the first time that ordinary Americans could trade stocks for real.
The democratization of the market.
And they could bet on all of this in large part because Wall Street decided we're going to lend people money so that they can buy into this dream. And that is really the story of sort of the roaring 20s and what happens. The stock market between 1928 and September 1929 goes up 90%. And
and there were days like year on year where it was up 100%.
Oh yeah, it was wild.
Yeah.
I mean, it was completely sort of this wild period of time, and it was extraordinary. And then, of course, people were so overextended. The valuations were so high. There was all sorts of political debates about whether things had gotten completely out of control. And invariably, as things do, what goes up must come down.
Yeah.
October 1929, it does.
It does. And then it propels us into the Great Depression.
It does, but that's
time.
the other big thing for me that was also a surprise in a way. I think a lot of people think like there was some terrible day in October of 1929, and then somehow the Great Depression happened.
Yeah.
It wasn't really like that. It was that October happened, and it sucked all the confidence out of the system. And then that was really just the first domino of a series of dominoes, mostly policy choices in Washington by President Hoover and the Federal Reserve and others, including tariffs, by the way,
Yes,
in 1930, that then walk us into 25% unemployment, 9,000 banks going out of business in 1932, 1933.
So, and then a multi-year process to get out of it with the New Deal and a world war.
Yes.
But okay, so I have listened to you on other interviews because you are on book tour, which means that you are in the market right now.
This is true.
You're a bit cute about it, Andrew, because you don't ever want to say whether we are in fact in 1929.
Right. Oh,
you never want to say if like we're
well,
just.
I'll actually go. I'll do for you because because I don't actually think
because we're massaging your feet.
Because you're massaging my feet.
Yes.
I don't think we're in 1929. I don't think it's preordained that we have to have a crash that sort of leads to something that's as cataclysmic as the Great Depression.
Mm-hmm.
But I probably think we're at least. It's more like we're in the 90s, and maybe we're like 1996 or 97. And in 98 or 99 or 2000, there's a crash. The question is, does it have to be cataclysmic like 29 or 2008? And I don't think we know the answer yet.
Okay.
And I'm actually hoping that it won't be that bad.
Yeah.
I have one wild card in my head that could change all of this and make it worse than all of those things.
Okay, well, let's keep that as a cliffhanger for people to keep.
But I don't know.
Okay, we're going to get to your wild card. I have to remember to ask you that. There's so much I want to talk to you about what analogies we can bring from 1929 into the late 2020s. I want to talk about the state of journalism, which was under kind of rethinking in the years of this book, and also certainly as now.
But by the way, all the journalists were on the payroll back then too.
I know, that was so wild.
Right.
And at some point I have to ask you, what was going through your mind when Alex Karp was gyrating on stage next to you at the DealBook Summit recently? But let me start.
We can talk about that too. Someone did an AI thing where they had him like doing push-ups on the...
Yeah, did you? I was going to ask you if you saw that.
Of course.
I actually thought that was real. When I first saw it, I'm like, wow, he is so fit. I really have to go to yoga more.
I wouldn't have been surprised if he had done that, but that was not real.
He was doing handstand push-ups.
Handstands on the chair. Sora is amazing. Sora is amazing.
Would you have challenged him to a duel?
No, I just would have started counting.
Yeah, that's the right thing to do there. So as you mentioned, the 1920s, where this book kicks off, it is like the roaring 20s. There are towers to the sky. There's lots of champagne flowing, even though it's the Prohibition.
Yes.
Which is like a wild aspect of this time.
Mm-hmm.
And it feels like a roaring 20s moment right now in America, in a weird way, in a certain part of the country.
In a certain part of America, I was going to say. I think it's like, by the way, but that was actually very much like the 1920s too.
Right? Yeah.
It was only a certain part of America. It was New York and some of the big cities that were feeling this sort of hop in their step.
Next to people who were really struggling.
Totally.
And this feels like right now, or maybe this has always been the thing. I don't know, but it now feels like...
No, I think the inequality issue was... if you just look on the ratios of inequality,
like
1920s are very much like now. There was a period, yes, because inequality. Look, there was a period of time called in the 50s, 60s, and 70s where the inequality happily was compressed.
Right.
And some people look back and say that was the ultimate American dream.
But then unemployment at that time was like 2.53%, right?
So the lowest unemployment we ever had was, I believe, 1954, and was 2.5%. Yeah. It was really the advent of unions. But look, part of it was the United States was a monopoly power. Everybody else was out of business around the world. Yeah. And so you could charge monopoly rents. And then when you go back and look, and really wasn't to the wages start to stagnate in the 1980s which I think if you go back and look is tied almost directly to the fact that the rest of the world all of a sudden started to compete with the United States again.
Right.
And so I sometimes wonder whether the sort of 1950s, 1960s American dream, which was sort of a leave it to beaver, a dream which was, if you know, it was.
Yeah. Wait, what is? I don't know what Leave It to Beaver has any. Sorry, I didn't grow up in the U.S. I have no idea about this.
The Leave It to Beaver version of the American dream was sort of a paint by numbers situation. If you go to school and you do okay, you're going to get a job and you're going to get a house with a picket fence and you're going to get a wife or a husband and 2 kids and a dog, and it was all going to be just fine. By the way, some people would say that was a very white dream. By the way, back in the day. But all I'm saying is it's possible that period of time is actually an historical aberration, not the norm.
I feel that about so many things that we're kind of packaged and sold as norms, the American dream, but also the idea of the modern nuclear family. Like these are aberrant moments in the kind of post-World War II, like pre-globalization era that existed for like a fraction of time. But these days, like in our roaring 20s, it seems like instead of like towers to the sky, we have rockets to Mars. Instead of flapper dresses, we have, balloon trousers. I'm sure you're very aware of the fashion trends.
I don't know about balloon trousers.
Balloon pants, I'm not wearing. I was wearing them for the last interview. I'll show you after.
Can men wear balloon trousers?
Yeah, for sure.
Really?
Yeah.
Who makes them?
I mean, all kinds of people. There's a really good, there's one company called Fried Rice that has a store in Soho.
Fried Rice is in
They make like cool printed.
Okay.
Yeah, it's very trendy.
I got something to do after this.
Yeah. Next time you go see that fancy dentist, you're going to have like little ankles showing for your foot guy.
Yeah.
Okay.
This is going to be like a running joke throughout the show now.
No, we're going to let it go.
I see how this is going to go.
But I was reminded reading your book of these polls that the Wall Street Journal does with NORC or whatever. They ask people what values are, quote, very important to you. Have you seen this in the latest one they did in 2023?
I don't think I did.
I'm going to show it to
say?
you. I'm pulling up a chart and people will see it if they're watching on YouTube or whatever.
Okay, this is now smart girl, smart questions. So I don't know what to do here.
So between 1998 to 2023, patriotism and religion fall from about 60%, a little above 60% to 40%. Having kids goes from being very important for 60% of people down to 20% of people in 2023. Yeah. Community involvement goes up, and then right after the pandemic, it just drops down.
Yep.
So it goes from 40 to 60 to 20, kind of, or 30-ish. And then one thing goes up.
Money.
It goes from 30% of people to 50% people saying it's very important between 1998 and 2023. And I just feel like having spent 8 years in the 1920s, do you think this would be similar?
Clearly the money side, yes. Community involvement, not necessarily.
Yeah, I thought it was so interesting. The characters in your book, a lot of them are like, one of the lines was he wanted to give his wife the life she felt she deserved or something.
So that's what I was going to say. And religion, look, John Raskob, you mentioned spaceships and some of these buildings going up. John Raskob built the Empire State Building. He was the Elon, I think of him as Elon Musk, very much of the 20s. But he was a devoted Catholic, so I don't think that he would sit here on the religion end and say not important. I think the money thing is clear, and I think part of it. Look, the human sort of element of this is sort of a FOMO. They didn't call it FOMO in the 1920s, but that's what it was. Yeah. It was you see your neighbor doing better than you're doing, and you're like, I'm a little jealous and envious of that, and I want that. And all of a sudden, this lottery ticket was available to people. And they thought, this is my way out. This is what I'm doing.
As someone who deals with money all the time, who's covering through DealBook, Squawk, you hobnob with billionaires.
I don't know about that, but sure.
Do you not?
Not really.
But you have billionaire friends.
If I have billionaire friends, I don't know if I have. I have
billionaire friends.
Do you?
Yeah, you
Good
don't
for
have billionaire
you.
friends.
And most of my friends are from high school, and a couple of them are doing well, but I don't think we're there yet.
Your book party had a lot of rich people.
Yes, that's true.
So, but you're
friendly in the milieu.
In the milieu. Do you think that money has become our new god in the 2020s?
So I think there's two things going on. So I think money on one end is become just a necessity to keep up. And I think this gets to the whole sort of affordability crisis that people feel. And given that inflation is so high and wages haven't kept up, people just need actual money. Like money, there is an element of money makes the world go round. You need it. But I also think, wonder whether it's a social function of social media. The sort of FOMO, YOLO, everybody can see everybody and also see what you can't have. I think that makes money even more...
Makes you more thirsty for it.
Makes people more thirsty for it. Because I think a lot of people, this is now pre-social media,
Tell us about the olden days.
No, I was going to say, I think a lot of people didn't see it. It wasn't as visible. If you were walking down the streets of New York City, you didn't see what was going on inside the homes of these people and how fancy it really was or how ornate it was.
Right.
You weren't staying at some ornate, fancy hotel, so you didn't know what that looked like, right?
And you didn't even have access to the same schools that some of these people had. You couldn't save and go. You
just didn't see it.
There were gates also.
There was gates.
Yeah.
You just didn't see it. And now you pick up TikTok and you can tour all of these things and it's constantly in your face. And so I think it creates both a FOMO and a resentment.
Yeah. I want to play this clip. You mentioned Elon Musk.
Okay.
This is a clip with him. He's much more chill than he was when he was on stage with you in 2023 at DealBook.
Okay.
Which is low bar. But this is him speaking at the Saudi American Investment Forum that recently happened.
But AI and humanoid robots will actually eliminate poverty. And Tesla won't be the only one that makes them. I think Tesla will pioneer this, but there will be many other companies that make humanoid robots. But there is only basically one way to make everyone wealthy, and that is AI and robotics. If you say, like, in the long term, where will things end up? Long term, I don't know what long term is. Maybe it's 10, 20 years, something like that. For me, that's long term. My prediction is that work will be optional.
Optional.
The crowd goes crazy.
Right.
Yeah.
Then he goes on to say about money.
I always recommend people read Ian Banks' culture books to get a sense for what a probable positive AI future is like. And interestingly, in those books, money is doesn't exist. It's kind of interesting. And my guess is, if you go out long enough, assuming there's a continued improvement in AI and robotics, which seems likely, the money will stop being relevant at some point in the future.
What do you think of that?
I mean, I'm not smart enough.
No, come on, you are.
Here's my concern. I do imagine that AI is going to change our world, and I imagine robotics will change our world. I don't know if that's going to happen in 10 or 20 years. But the thing I'd worry more about is I imagine the spoils of all of this going to this idea that nobody's going to need money is going to accrue to the shareholders and owners of the AI and robotic companies. Unless you genuinely believe that all of it's going to get redistributed through some kind of universal basic income or something else that I don't know about. And most of those people that, whether it's Jensen or Elon, I think are capitalists. I don't think that they're going to be parting with the cash so quickly and saying, hey, we're just going to give it to everybody. I'm not sure how that piece of it would work. I would love to talk to him more about that.
I would like to. I think he talks about the term universal high income. And I think Elon is certainly a capitalist, but also probably believes in some kind of, like I always say about Elon, it's like someone who cares deeply about humanity, gives no fucks about humans.
Yeah, that sounds about right. By the way, I was going to say, prior to the success of ChatGPT, Sam Altman used to talk all the time about UBI.
And he did that pilot in Oakland, right?
Yeah.
He was
so maybe we're all living in some kind of UBI utopia, but I just don't know what that ultimately feels like or looks like. And I do think that Elon has, in terms of his timelines, have always been aggressive.
Yeah,
let's just say.
Did his 1920s corollary suffer from that too?
John Raskob was like Elon, only in a different way. John Raskob, so famously, he's the one who actually changed the culture of America, actually, around credit and debt. So he was working at General Motors, running General Motors, and he decided, how are we going to sell more cars in America? We're going to loan people money so they can buy cars. Prior to that, it was like a moral sin to take a loan. People didn't even like to get a mortgage back then.
Right.
And once they started buying cars from General Motors with a loan, then Sears Roebuck clocks what's going on. They say, we're going to do this. And then Wall Street says, okay, well, now we can do this too. And it really did change the whole psyche of taking on credit. So that was sort of his first invention. He then becomes an extraordinary investor, makes a small fortune, is then inventing the idea of the equivalent of maybe one of like the first mutual funds that ever existed in the financial space. He then, by the way, like Elon, decides, I'm going to get into politics.
Yeah.
And supports, he loses. He's on the wrong side. He ends up losing to Hoover. He supported Al Smith for president. But then decides to spend basically all of his money for years trying to undermine the reputation of President Hoover. Secretly, by the way, paying journalists and creating all sorts of secret schemes. Then he builds the Empire State Building. And he was like a philosopher king in that every journalist in America would come talk to him. And finally, he comes up, and I don't think he gets enough credit for this, we now have a 5-day work week.
Right.
He wrote a paper in 1929 that we should have, back then people worked 6 days a week. The stock market was actually open on Saturdays. Everyone worked on Saturdays. And he had this idea that we should not work on Saturdays, not because he wanted to be nice to people, but because he thought that actually would create a bigger consumer economy. If you had the weekend, more people would buy cars because they could go places. They'd buy gardening equipment. They would do different outfits to go to different events.
Oh, interesting. And the other thing that's fascinating is this is the time, the 1920s are the time where I will say celebrities become uglier, which is to say they stop being just athletes, or I should say, that's not kind. Celebrities become less good looking. They stop being actors and athletes and Hollywood starlets.
It's not all the beautiful people on the covers of magazines. It's now
the DealBook crowd.
It's the business. It's the business folk. The business folk. It was true. This is when financiers for the first time are on the cover of magazines and newspapers, and they became their own version of a celebrity. It wasn't Babe Ruth anymore. It wasn't some beautiful actress. And
people cared what they thought about everything, like the way we do now. We care about what Elon thinks about
we all care about what Elon thinks about now, and Sam Altman thinks, and all the people are Jamie Dimon. They're all on the cover of these magazines. Right. That really started in the 20s. So Forbes magazine starts in 1917. Time magazine starts in 1923. The New Yorker starts just a little bit later than that.
Yeah, and the New York Times has been around for a while at this point. How much of that creation is just money doing money's thing versus media doing media's thing?
Oh, that's a great question. I think it's probably, like everything in life, a combination of both. Clearly, the business community realizes that they need to reach people, so they want to take advantage of the medium.
Yeah.
And to the degree you think that media and journalism are trying to reflect what people are interested in.
Yeah, that was a shiny object.
That was a new shiny toy.
Yeah.
No joke.
But one of the billionaires who we're so fascinated by, Mark Cuban, is somebody who's like a capitalist who is a proponent of universal basic income for caregivers.
Right.
Which I think is actually like a great agenda for the Republican Party to try to seize and implement right now. What I was shocked by is that when you have Doge and people like David Sachs and all these people from the AI world who've been immersed in some of the thinking about UBI have such an agenda in Washington, there didn't seem to be any forward movement on that kind of social safety net at all for this massive technological
I do hope
shift.
that if we all don't have jobs, or the jobs that we have today, that ultimately we are our caregivers to each other. Like that would be what you'd hope for.
And then we would, as a society, pay out in whatever form, barter or whatever it is.
That's what you'd want.
So this crash that happens, that sparked in 1929, but actually takes a long time to go on. You talk about it in your book as the collapse was not a moment, but a relentless unraveling.
Yep.
Relentless. Can the cause of it be pinpointed, even if the timeline of it isn't pinpointed?
Well, so I can identify the cause, but the cause is the confluence of 4 or 5 or 6 different things.
Okay.
The crash being sort of the first component part of it. So you have the sort of confidence sucked out of the system with a bunch of people who've now lost their homes or mortgaged their houses or out of work. But that's just still a small, relatively small group of people. Interestingly, the stock market by the end of 1929, that year, is only down 17%.
I know, that was wild.
But that was like a head fake for the President of the United States and for everybody else who looked at the market as some kind of barometer of how things were going, because what it missed was you could look at it and go, oh, things are okay, except that all of the people who had bought on margin and taken out these massive loans, they weren't able to get back to even to the 17% because they'd already had to sell their homes
to pay
for the losses when the stock market went down 50%. The bank didn't say you can just hold on to that until it comes back up again. They said you can't afford to do any of this anymore because you owe 10 times that.
So the leverage is a huge
It's the leverage.
cost.
It was the leverage that was the huge cost. So that's the first sort of piece of it. Then you get into the 1930s. And Hoover had promised farmers who he had tried to get to vote for him back in 1928 that he was going to implement tariffs. That was his whole thing. His whole thing was like, hey guys, you vote for me, I will help you. I'm going to put tariffs on the table. By the way, every economist, like today, goes to Washington, begs the man, says, please don't do this. You're going to just destroy things.
Every economist or every capitalist? Everybody.
Everybody,
in your book,
everybody, economists, the bankers.
Yeah.
I had diaries of these folks. Literally, they're talking about how they're on their knees begging this man, do not do this. Of course, trade drops by 60% a year later.
Yeah. Okay, so that's a huge cause.
So
that's
to throw that into the mix. Then you have a separate situation going on where he's, by the way, deciding to raise taxes. He's also, interestingly, trying to jawbone. This is interesting. Sort of trying to jawbone folks into believing that the economy is better than it actually is. It's sort of very, by the way, it's very Trumpian and even very Biden-like in that, people feel what they feel, they see what they see, and yet you have people out there telling you that it's not that way.
But that seems like, I had Paul Krugman on, and we did this whole episode on, are we counting the economy wrong? Because it feels like that all the time. Like these indicators are not useful indicators for my own experience of life, and I feel lied to by government, right? Which doesn't help trust.
Totally.
So he was an optimist seller.
Right. Totally. So you have this optimism seller on one end. By the way, the tariffs are not helping the farmers. So now the farmers are having their own problems. That's, by the way, hitting some of the smaller banks as
because of the farm debt.
Because of farm debt. So now they're having their own problems. The Federal Reserve is sitting around on their hands thinking, well, we can't really do anything about this, when the truth is that the lesson that we learned it actually in 2008, though I think Ben Bernanke actually learned it because he did his PhD thesis at Princeton on the Great Depression, is when you have a problem like this, you have to throw money at the problem. The U.S. did the opposite. They went into sort of austerity mode.
Yeah, they needed to go into pandemic mode where they were writing checks. Now, the other big debate that was happening during this period, though, was it wasn't clear the Fed technically could print money the way they do today, because back then we were still on the gold standard. Right.
So every dollar that we printed needed to be connected to gold. And there was a big debate. Could we get off the gold standard? But nobody really wanted to do that. And then there were other things that didn't happen either, which was you could tell that the banks were going to start to struggle. You had these bank runs happening. And the right answer probably was to implement something like the FDIC, something where you could insure deposits. But nobody wanted to. Hoover didn't want to do it. By the way, Roosevelt didn't want to do it. They all thought this was a terrible idea because they thought it was going to create a moral hazard, because there would be no differentiation between a bank that took on crazy risk and was mismanaged entirely and some, bank that was doing all the right things because the government, the taxpayer, was ultimately going to bail you out.
Do you think that's true? We've seen these bailouts of banks that have done that. I know like Silicon Valley Bank, they wiped out the equity.
I think the answer is that it has ultimately been to the benefit of the country for us to have some safety net. It's not a safety net, by the way, that protects every account in its entirety, but for the average American that has whatever savings they have, a good part of it, if not all of it, is protected.
Okay, I want to take a creative Eddie here because I have so many questions about this FDIC thing. So $250,000 is protected, right? If you
now back then, I think it was $10,000.
Okay, so little.
Yeah.
So, but if you have like $251,000, should you keep $1,000 in a different bank or in a different under your mattress, or what? Doesn't the bank? Don't they actually really insure it beyond the 250? Like, haven't they actually like bailed out banks?
Yeah,
that
it depends
protect
where
it
your
more?
bank is, though.
Yeah.
I mean, if we were, I live in New York City, so there's only sort of the big 5 banks in the country that are here now. Yeah, if I lived in a little town with a small bank that could maybe go out of business at some point, yeah, they wouldn't be protected, and they'd be too small to fail.
Right.
So people would let them fail. They would protect your 250, but they wouldn't protect the rest. It's interesting. I imagine if you have more than $250,000 at JP Morgan or Bank of America, I think those banks at this point are too big to fail, and those banks will be protected likely by the government in some way.
This is not financial advice to anyone.
It is not financial advice. If there's like a little disclaimer thing.
Yes, let's do that.
And that could be totally wrong about this. So get out your salt shaker.
Okay. So there's so much going on here that seems very similar to the 2020s, right?
Yep.
In terms of tariffs, in terms of leverage and financial innovations. I mean, we have crypto. It's great innovation over time. All things.
All the things.
The poor banking structure. And also what feels a little bit in your pages as this kind of like castrated government. Like there is a group of people in the Fed sitting around and doing things, but the real things happen at these like Park Avenue homes where the financier of the day is
running the
calling
world.
in people and running in the world. It's like these amazing rooms where it happened. But before we get there, I need to ask you, you talked about Hoover being, I would say, like this opioid of optimism dealer.
Yes.
And yet so many people in the book seem to know this was coming. So you have Coolidge, one-term president, saying he doesn't want to seek re-election because he sees this coming.
Right.
So
he thinks there's something bad's about to happen.
a man of presidential ambition, willing to put it away because he sees it coming. You got Merrill of Merrill
That's what he
Lynch.
said, and then everyone assumes that in retrospect that's why.
But did he say it before or did he say it after?
Said it before.
Yeah, broken clock is right. Maybe, I don't know. You've got Merrill of Merrill Lynch who's trying to like sell off.
Charles Merrill telling everybody to get out.
You've got like this Dr. Doom of his day, this economist Babson, Nouriel Roubini of his time, shouting as the market's up 100% year on year that like, no, this thing is coming crashing. And so were there real fundamentals that could have gotten ahead of what these people saw? Or was it like a broken clock is right 2 times a day kind of situation?
I think it's a little bit closer to the broken clock.
Okay.
I mean, this is the issue about Cassandras. So here I am now talking against my book. The truth is, most of the time, the stock market does go up. It does. Over the last 100 years, it's just gone up. You would be much better off having been in the market the whole time than not. And so to catch it right, I mean, here you have Charles Merrill. He's sort of right and sort of wrong. He said that in 1928. The market went up 90% after he said it. So is he right? I don't know. And this is sort of the great challenge of timing the market. I see the Cassandras playing a hugely important role as sort of raising red flags that people need to be focused on all the time, but not necessarily like always do exactly what they say in that moment because...
Yeah. They're like curbs on the road, but they're not like a signal that
Exactly.
you're on a cliff. Do you, but like this idea that the market always goes up, it's like, yeah, but it's incentivized to always go up. And and we're incentivized to always find financial innovation, leverage, democratization, other ways of new instruments to keep this market going up. Like, how do we know the value of the actual things in the market?
Oh, so I'm not, okay. Look, if you buy let's do something very basic. You buy a farm.
Okay. Yes. You know me so well. Yeah.
You buy a farm.
Yes.
And at least over the years, let's say you had some cows on your farm.
Yeah. I'm not going to make you do like a discounted cash flow of my future farm earnings for our audience, but isn't it like now stocks are a little bit more like art? Like the value is in the eye of the beholder and like
I think there's certain stocks that are in the eye of the beholder.
and particularly in like private markets, like venture capital.
Oh, goodness. So yes. So anything. So right now, look, there's a public market,
Yes.
the stock market, which ostensibly should have some kind of price discovery because a lot of people should be buying and selling these things and hopefully there's some relevance to what's happening in reality. In the private markets, whether it's venture capital or private equity or private credit, people aren't buying and selling every day. And so the people who are deciding what something is worth on any given day, or any given moment, are the people who own it. There is a mark to make-believe situation that is happening in America right now. No question. And then the question is, does that come undone? Or some people would say that it's a feature, not a bug, that these things can be held for a very, very long time at these mark-to-make-believe prices until they almost grow into them.
Or like they get taken private again, then they come back on public. Right. But just to give an example, like Rent the Runway.
Yes.
Or, some of these companies that came up as quote-unquote tech companies and got venture capital and, love the company, no shade on the company, but like its market capitalization today is far lower than the equity it raised. I don't even know, it might be that the founders, I don't know either way, but it might be that the founders walked away with money off the table that is more than the current.
Yeah, so, there's a lot of what I call a story stock.
Yeah.
A story stock is a company that has a great story that people want to buy into. They want to believe the dream. Mm-hmm. And by the way, like every major AI company right now is a story stock. Private or public, doesn't matter. It's a story stock. People are believing something. You have to believe that these companies in 2028 or 2030, for OpenAI stock or the valuation for OpenAI.
Which is how much right now?
Oh, goodness. It's on its way potentially to $1 trillion. We'll see. But their plan is to be profitable by 2030. And on their plan, they would be losing $75 billion a year in 2028. So you have to basically have a swing, a $75 billion a year swing to profitability in the course of 2 years to get there.
Yeah.
That requires a lot of faith.
And then there's a huge amount of real estate and other rush coming up under it, like the AI infrastructure plans of America.
All of the commitments.
Oracle, all these companies, CloudWeave, they've all just I think suffered a sell-off this week.
Yeah, because everybody who said, because OpenAI and Anthropic and every other big hyperscaler is going to have to pay the folks who are building the data centers money to do this. And the question is, will they have the money to actually do all of this? And that's a real question.
Do you have an answer to the question?
I don't think we really know yet. I think so what they're looking at, just so it doesn't seem totally absurd,
right,
is they're looking at their own growth rate right now.
Right, of course.
And they're going,
amazing.
Yeah, and they're going, oh my goodness, things are going up by 5-10x a year.
Yeah.
And so if we stay at 5 or 10x a year, we're in the money.
It's not even a hockey stick, it's just a line at some point. Yeah.
But if it doesn't, and that's what we don't know.
We don't know. So I want to do a quick lightning round where we walk through the other financial crises that have happened in recent years. And I want 3 things from you. Okay. What caused it, what we learned from it, and what we failed to learn from it. Okay. Okay. So 2000.
These are smart questions. The name of the show is just so wrong. Okay.
I'm sorry. 2000 to 2001, the dot-com crash.
What caused it was just severe overvaluation and a realization more than anything else that there was a problem. That problem was identified in part by some of the telecom companies, fiber in the ground and things, because by the way, those guys couldn't pay for what they're doing. So there's a little bit of leverage in there, but not the kind of leverage that ultimately 2008 or 1929 spawned.
Okay, so unrealistic valuation more than leverage. And
more so.
What did we learn?
But leverage is a piece of it.
Yeah.
I think we learned that you got to be careful about the dream. You got to be careful about the dream. Pets.com was a dream. But by the way, the thing that's so crazy and why this is so hard to predict about is you go look at Amazon. I remember covering Amazon back then, and there were headlines that would say Amazon.con or Amazon.bomb because this was a company that did
.con, C-O-N. I didn't hear that correctly.
Yeah, because people didn't believe it didn't make money. The company didn't make money. I mean, some people would say that company, I don't want to say it was like OpenAI because OpenAI had to continue to raise new money constantly. Amazon wasn't raising money continually, but nobody had ever really seen a company that just didn't really make money and yet was valued as highly as it was. They had not created AWS yet. And so, you see that on one end and you see pets.com on the other.
Yeah.
And you go, okay,
Okay.
Who are you going to believe in? And how do you know? It's hard to know.
So what did we not learn from that crisis that we should have learned? Or is that too hard? Is that too big a question? Maybe. I think
No,
maybe
it's not too big a question. I think the other thing that happened during that period, though, is we also realized there were some things that were taking place in the financial machine of it all. This goes to sort of the Wall Street piece. Back then, analysts were writing these fluffy reports about the companies and were getting paid for the reports because they were doing the IPOs. I mean, this goes to, there's sort of there was a bit of a financial chicanery situation going on. This is anytime the markets get sort of super hot, Wall Street oftentimes does things that they should not be doing.
So they're selling their own future financial book, basically.
A little bit, yeah. I mean, this is, back in the day, Henry Blodgett. This is what Henry Blodgett got in trouble for.
Yeah.
He was working at Merrill Lynch, and he was an analyst, and he was writing these reports.
Right.
And he was telling people that certain stocks were better than they probably were, in part because he knew that
he'd be doing the transaction.
That Merrill Lynch was going to be doing the IPO, and they were getting bonuses based on how many IPOs they were getting. And so, some of those things I think we did learn from.
So some shenanigans and
but you always need to be watching for the shenanigans on one end, right?
Okay. So then the global financial crisis, 2008. I'm going to skip over the Asian financial crisis and the Russian and all
way
that.
over leveraged.
Yeah.
This goes maybe to the American dream. We totally doubled down on housing. We all believed that everybody should get a house. Then we did policy things that sort of made it created crazy incentives for banks to provide loans that they shouldn't have been providing. I mean, the truth is also that we blame everybody else. The American public took on loans that they shouldn't have taken on either.
There was like a moral hazard.
There was a serious moral hazard. And then, most of the banks sort of started to have FOMO about each other and started to just sort of got wild and out of control.
Okay.
And
what did we learn and what did we not learn?
What did we learn? We learned that you need to have much higher capital requirements and you need to really be minding the store and that you need to change the incentive structure for all of these things. And I think actually largely in the aftermath of that period, we did that.
Yeah.
What did we not learn?
Yeah.
Well, I think there's a real question about the people who were involved in it. For the most part, many of them still have their jobs. And so did they learn something from this?
No accountability.
Not? Was there accountability?
Yeah.
And look, I would argue it's almost a political issue. The bailouts, in fact, what Ben Bernanke did and what the government did, I would argue was actually a very good thing. From an economic perspective. It was the right thing to do. Some people don't believe that.
But it pissed people off a lot. Like Occupy Wall Street.
I believe what happened in 2008 in some ways led to a complete shift in America around their thinking about expertise.
For sure.
Some people will tell you that there's a direct line between 2008 and the election of Trump in 2016.
Yeah, I think that's not, I would kind of concur probably. Yeah. There's a lot of distrust in the system. And
a lot of distrust.
Yeah, a lot of distrust.
I think actually a lot of the distrust, by the way, we had a whole second set of distrust during the pandemic, but I think a lot of the distrust started after 2008.
100%. What about COVID-19, the 2020 recession? That was like kind of a less blamey.
It was less blamey, and I'll tell you why it was less blamey. I remember being shocked that pandemic happens, and all of a sudden we start bailing out everybody.
Yeah.
I mean, PPE loans.
We're even bailing them out before.
The airlines, everybody gets. It was literally like Oprah with her. You get a car, you get a car, everybody gets a car, and there was no pushback. And I remember being shocked by that because having lived through 2008, I remember all of the finger pointing, everybody saying, and in retrospect, I think it was because everybody got a car.
Yeah.
Meaning, in 2008, part of what was happening was it seemed like the banks were getting the money and the individuals were not, right? Hank Paulson, Ben Bernanke's view was that the most practical, efficient way was we give the money to the banks and then the banks, it eventually will
trickle down.
It'll trickle down into the system, right? And of course, homeowners and others were saying, well, it's not trickling down to me.
Right.
In the pandemic, we just started sending checks to everybody. So nobody really had a place to complain.
Right. Okay. Yeah. I mean, that's kind of the way that America does accountability. Like I had very tragically a friend who passed away in the Miami Surfside building, my college roommate. And you know, if you look at, it was terrible. And her brother lost his parents and his sister in that night. And I think about it a lot because, you know, fast forward, there have been these payouts, you know, like a 10 million person, maybe. I can't remember what the payout was.
Wow.
But like, you don't, I still like to this day don't really know who's accountable. Who did the building code structure change? Like, are homeowners associations under different obligations now to consider? You know, like, it is something about the way we do accountability, which is so broken. Which is like, yeah, kind of like we pay out reparation. I mean, there's so much of that happening in this book in Europe, et cetera. But like, we don't like plug the problem.
Well, but I will say that is often true. Interestingly to me, after 9/29, we didn't have accountability in that, you know, most of these characters did not end up in jail. A couple of them did get arrested, and 2 of them end up in jail, but oddly for other things. Well, but we did actually get some form of accountability in the form of the SEC for the first time. So insider trading all of a sudden is illegal. And all that was totally legal back then. I mean, all the manipulation, the shenanigans, there was nothing wrong with it. People didn't even think it was amoral back then. We can get into that. But, you know, then you had Glass-Steagall, which broke up the banks in terms of commercial banks, investment banking, added FDIC insurance. 1940, you get the Bank Act. Now you have capital requirements. So things did happen that changed the game. After the crisis in 2008, and by the way, after 2001, things did happen. Elliot Spitzer, of all people, is responsible for the fact that so many bankers, the analysts, are no longer allowed to do what happened in that period of time. So there were things. Then 2008 comes along. We get Dodd-Frank. We get stress tests. We get all sorts of other legislation. And the truth is that changed how banks loan money and has inspired what is now maybe the scarier part today, which is we have a whole new industry called private credit. Yeah. And so most of the loans pre-2008, if you were a business, you'd go to a big bank. You'd say, give me a loan. Now you don't go to them. You actually go to these private companies that are basically not regulated because Dodd-Frank has nothing to do with them, and they loan you the money. And as a result, we now live in a less transparent world because we were always fighting the prior war and we're missing the next one.
It's like failure of the last analogy. When I look at all of these things, I think like there's often this like financial innovation instrument. There's like a Band-Aid put on and there's a new thing that comes along.
Always.
And as Winston Churchill is like so like, idealizing in this book, like the American.
Well, he thinks this is a feature, not a bug. 100%.
He's like, it's not meant to prevent these crises. It's meant to survive them. And he writes, to his English critics, like they're dummies. They should be, following the American way. What do you think is the financial innovation that we're seeing now? Or like what is the leverage or the thing that exists right now in our market that is dangerous?
A little cliffhanger. We'll be right back.
Guys, today's sponsor Dumb Question is from me. I'm going to take the next minute to tell you a little bit about Smart Girl Dumb Questions and to ask you for your help in continuing to make independent, fact-based, and curious journalism. No, I'm not going to ask you for money. Here's what I need. I would love you to tell 10 of your friends about the show, or 100. I don't know, blast that reunion group that you muted, and definitely tell your mom, and tell your mom to tell her friends too. Even if you don't like the show and you're just like hate watching it or listening to it, tell 10 of your friends to hate watch it too. Numbers are numbers, people.
What do you think is the financial innovation that we're seeing now? Or like what is the leverage or the thing that exists right now in our market that is dangerous? And this could be your wild card that you alluded to earlier, or it could be something else.
Let me throw the wild card in a second.
Okay.
So I think there's a whole bunch of new financial products. Look, a couple of years ago was really the sort of popularization of SPACs, these blank check companies. That was sort of a new product. A lot of people got excited about that. They thought that was like a lottery ticket. And invariably, we didn't have the right guardrails around them. The product, a SPAC could work if you actually incentivize people properly.
Yeah.
You have the right transparency around who's getting the fees, how much they're getting, why this is working, when they can sell, how they can make projections, but we didn't do any of those things.
Yeah. These are specialized purpose acquisition vehicles. And
Correct.
they like Chamath Palihapitiya, others.
Chamath Palihapitiya and
big.
others, basically, they would raise money. They're called a blank check company because you would raise money for a blank check, and then they would go out and buy something, and then you would basically get whatever they bought.
Yeah, but the people who led this back were making 20%
They were
up or down.
They were taking money out almost irrespective of what was happening.
And Trump's Truth Social, that company is
that was
also
an example of
SPAC.
it too.
Exactly.
And most of them, I mean, like 90% of the SPACs basically failed.
Are done. Okay.
So that's an example of something.
What about something that's happening right now?
So one of the things that's happening right now is after the Genius Act, which was passed earlier this year, there's a whole new move to basically make private equity investments and venture capital investments and private credit available to the public. So effectively taking what are private assets, whether it could be a podcast company, it could be a nursing home, it could be a hospital, it could be an apartment building, whatever it is, and making them available so that they're wrapped up like in a fund that then you could buy in the retail market. The difference is most public companies have to disclose what's going on in each company. This won't be like that. It'll still be like a private equity fund. So there'll be sort of private assets without the disclosure in the public markets. What's even more complicated about them is a lot of them are described are called semi-liquid vehicles. Not to get you really confused, but you're so smart asking all these smart girl smart questions that they're semi-liquid because you can buy them. It looks like a stock. You can buy it on any day.
Yeah.
But if too many people decide to sell it at the same time, the fund can say, excuse me, we're not allowing you to sell the stock today.
They can force you to hold.
They can force you to hold. They can put up the gates. They can put up gates because the only way they can actually send you cash when you sell is either they actually have to sell down the assets they have, which are hard assets, which they can't typically do, or more people have to give them money.
Buy the thing.
And some people would say that looks like a Ponzi scheme, if you will. So, and that's going to be a new product. And that's like the next big thing.
Yeah.
And I'm sure that some will work and some won't work. And at some point in life, some regulator will say, you know what? These products are not bad products, but they just have to be done slightly differently.
Is there anything that is like feels risky now, but is going to be completely normal in 20 years, like the way leverage buyouts?
I think those will actually be. I think everybody will have a piece of those. I just think the difference is the problem with those instruments is if they tell you that you can't get your money back, and you're a retiree and you need the money, that's no good. It may be that the right approach to those kinds of instruments is to say, you know what, they're part of like a target dated investment fund, and based on your retirement age. And for the last 10 years of the fund, you can't be in those because you can't get your money out. Something like that. But let me throw one major wild card into this whole scenario, which is if in fact we have some kind of crash, crisis, or something else, the lesson that we keep getting taught is we need to throw money at the problem. The government needs to throw money at the problem. The Federal Reserve needs to throw money at the problem. And so far, that has seemed to work out just fine. Back in 1929, when you would have wanted to do this, we had a budget surplus in this country. Okay? We now have so much debt.
Yeah.
Meaning, I'm talking about sovereign debt. Forget about the corporate debt. We now have so much sovereign debt. The U.S. government has so much sovereign debt that I wonder whether there's some red line that at some point there's a crisis. We say, you know what, we're going to write a check for $1 trillion, $2 trillion to this or whatever it is. And at some point, the investor class that buys treasuries, that buys bonds, says, excuse me, I see what you're doing. You know, we like you people. We're very happy to continue loaning you money, but you're going to have to pay us a lot more for the risk that we're taking. And, you know, if the interest rate starts to really fly, all of a sudden you can get into a vicious cycle where you can really get into an austerity situation, like for the whole country. So that's the thing. That is the wild card. And I just don't know when you hit that red line. I always thought we would hit that line a long time ago. And it may just be that the world is relative and that people say, well, the U.S. is still better It's
But
doing
that's
better
the
than
big
Europe.
change.
and
That's
this-
the big variable between 1929 and 2026, which is like it's not a monopoly by America
not a
anymore.
monopoly.
It's a kind of you have this multipolar
Right.
world order that's emerging. You have real champions potentially out of
Yeah.
AI that are coming out of. You have resource constraints that are not
Yeah,
relying
so
on
that's
America.
why that's the piece of it. That's the piece of this puzzle that I
Yeah,
think is
we
like the
don't know.
true unknown.
So you think that's scarier than like an AI bubble? Are we in an AI bubble?
We're probably in an AI bubble, and the AI bubble probably will pop, but that doesn't mean that AI will not be with us 20 years from now. Like the internet bubble popped, and the internet's even more important than it is today. So the flip side of AI, which maybe goes back to your tape with Elon Musk, is there's the AI bubble and what happens if it fails. There's also the what happens in success,
Oh yeah, you've been reading the culture books.
right?
Yeah.
Because in success, if we don't,
Yeah.
we're not needed, then what? So
Yeah.
that's why that one may be more of a double-edged sword than I fully
You
appreciate.
do. What about crypto? How risky is crypto?
I mean, look, what I don't know is Bitcoin has held up all of this time.
Mm-hmm.
I always, Warren Buffett and Charlie Munger used to call it rat poison. It is a belief system. It is. There is a, the cynics or the naysayers would tell you that, you get quantum computing going and all of a sudden the encryption that makes Bitcoin work can be broken,
hacked, yeah.
can be hacked or something happens. And then what happens to that money? Having said that, it's still a small piece of the puzzle. It's only a couple $1 trillion. So it's not that the whole economy comes undone, but I think if the air really came out of that part of the world, it would also invariably come out of other parts too.
Okay. I'm going to do quick lightnings on this. Your last book, Too Big to Fail.
Yep.
So the banks were too big to fail.
They
The
were.
big banks were too big to fail. What is the modern entity that is too big to fail? Whether it's a singular AI company, whether it's a stable coin, whether it's a specific type of fund or the idea of
Look,
a
I think
country?
I think some of the banks are still too big to fail. Back then, the phrase was only used in the context of financial institutions. Now we talk about cities, municipalities, states, countries, too big to fail. I do think that maybe cloud computing, oddly enough, has become too big to fail. So the last time that there was an AWS outage or something where the whole world for 3 or 4 hours has stopped, those companies largely are now too big to fail. If they were to fail, we would have they're like electricity.
So, and is that a good use of taxpayer money to bail out the too big to fails?
I think ultimately it is, because the truth is, what's the alternative? They're providing either water or the equivalent of electricity to everybody. And so if they're a choke point in the entire society, it's a little bit like airlines. We bailed out airlines during the pandemic because you need those planes in the sky for the entire economy to work, because people need to get from place to place to place. Otherwise, the whole thing sort of breaks down.
Yeah. It presumes that the entire economy needs to work.
Well,
That's the big philosophy. I mean, I've sometimes early on in crypto when I was at Stanford and all my friends were buying Bitcoin and I didn't. I made some really bad decisions in my life, but financially, but great emotional decisions. I remember thinking at the end of all of this, and particularly with DAOs and things that, at the end of this, we're all going to be in this barter universal, kind of like the culture books-ish kind of world. I don't know if it's techno-optimistic.
I've never been to Burning Man.
But I haven't either.
But I'm told that that's the barter society.
Yeah. But I think that there is a world in which we move back to that. If AI liberates workers or AKA steals their job, however you want to say it, if we can create a system where people can become guitarists and work as a barista because they have health insurance, AKA Madrid, is that a better society? Do you need to be doing the things that we as New Yorkers think is just so fucking normal to do?
I think I'm going to go to Burning Man this year just to figure this out. I think I'm going on a journey, a spiritual journey. I can't give you an answer just yet. Can I come back next year?
This is really dumb.
Can we go?
Yeah.
Can we both go to Burning Man and then do the show
Let's
from
go to
there
Burning
and
Man
discuss?
together. Yes, we will have to barter to have people podcast for us and all the things and provide that. Okay. Does the government have more ability to fight off a future crisis or less than in 1929 or 2008? We were talking about this and you're about to respond.
I think more because the world is, well, it depends how the crisis unfolds. If it's specific to us, probably more because you might even have allies of ours try to help us. If it's everybody all at once in a sort of true global crisis, maybe a lot less.
Interesting. Who do you think has more trust right now? You operate in the intersection of media, business, government, I mean, to cover it, see what's happening.
We're all on the floor.
Yeah, everyone's on the floor.
We're on the floor. Yeah.
Individual.
Is there a basement?
Yeah.
Can you fall off the floor?
You can fall off a floor into the basement. I mean, there's this real anger at billionaires these days.
Yeah.
And I was seeing that there are 1,000 new billionaires minted in the last 5 years.
Right.
400 of them immediately after 2020. Like in the year 2021 was the highest number of billionaires ever minted.
By the way, we're going to have a whole bunch more in 2026.
Really?
Yeah.
Why, are you becoming one after Burning Man?
No.
Oh.
Because Anthropic
Right.
and OpenAI.
Oh, they're not already?
Because they're all going to go public.
Right.
And so they're actually, to the extent that they are billionaires now, they're going to have their liquidity event.
Yeah.
So they actually could be genuine billionaires, if you will.
Yeah, not paper billionaires. When will we have our first trillionaire?
I think Elon's on his way.
Yeah, he's like 400 to 600 billion right now.
Yeah, but we'll see what happens if SpaceX goes public next year as well, depending on where you think that heads.
Yeah.
It would not surprise me if we get there pretty quick.
There's a very powerful scene in your book. There's this moment in 1912 where J.P. Morgan, Jean Pierpont Morgan, is testifying. And he's asked about his own power.
Yes.
And what does he say?
He doesn't think he has power.
Yeah, he says, I do not know that I do, or something.
So I remember reading that and thinking to myself, that's pretty much how I think most people feel, even the people who have the most power in the world.
And you think that's still true today?
I do.
And when you look at
I think if you were to sit here with Elon Musk or Jeff Bezos and say, do you feel on any given day that you actually have power, like true power? They don't even think they're successful.
Yeah.
It's a very strange, it's like a mind F, only because, people think that, if you have all this money and you have these titles in your business card, that you should feel not that you should feel successful, you should feel powerful, you should also feel responsibility for the great power.
Some obligation.
The obligation, all those things. It's not that I don't think they feel that, but I think on a day-to-day basis, I think that they don't.
At your book party, a lot of old guard people, Michael Bloomberg, whatever, Blankfein, et cetera. But then there's the young crowd,
right? Sam
Altman, Mark Zuckerberg, et cetera. Do you see a difference between that generation, or are they all in the J.P. Morgan, I don't feel successful, I do not know that I have the power?
I think, look, I'm of the view that most people of this sort of shoot the moon success, one of the reasons that they've been able to shoot the moon is that it comes from they're still trying to prove themselves.
Yeah, the insecurity.
There is that.
Yeah.
And they're trying to get to the top of the mountain. And even when you think that they're at the top of the mountain, they're not just like skiing down the mountain. It's not like I'm done.
They saw the next one.
I got to get to the next one, or I got to stay at the top of the mountain. And so they feel some kind of pressure, even though the rest of the world doesn't feel that they should feel that pressure.
Yeah.
And I don't think the money, I'll say this, I don't think the money is emotional armor. In fact, I almost think it's like anti-armor. I often think about that because I think the public looks at these people and says, screw them, and you can say whatever you want and this and that. And they feel it on the other end. Like they feel the speed bump in like it's like there's no suspension on the car. Really. Yeah. I think that's true. But you said about the responsibility of the young versus old.
Yeah, do you think there's a generational shift at all, or less, more? Because it seems like in the last, we started this 1998 to 2023, all these other norms, religion, patriotism, everything has gone down.
I don't know, because a lot of people who've sort of given to philanthropy and done a lot of the things that, let's take a Michael Bloomberg, who I actually think has done extraordinary things. Most of the philanthropy that he was doing at this sort of level he's doing it has actually been in the last, call it, decade or two of his life. Same thing with Warren Buffett. I was going to say, but call me when Elon Musk is 60 years old
Yeah.
or 65, whether somehow it shifts then. And I don't know the answer.
These guys want to live to be 260, so we'll call you then.
Oh, yeah. So maybe it's going to be a different, the timeline will be different.
We'll see. Okay. I want to do a lightning round on media, which happens in this book. And then I want
Yes.
to talk to you about DealBook, and then we're going to get out of here. But okay. Did the media have more trust in 1929 or in 2025?
Media had more trust in 1929.
Really? Okay. Did they trust their...
Probably for the wrong reasons.
Yeah, because they were bought and paid for. And
Well, they
so
were bought and paid for, but the reason they had more trust was that people didn't have any real sense that they were bought and paid for.
Yeah.
And there weren't as many media outlets. And so the amount of communication, the amount of technology that we have today to be able to question everything at any given moment. I mean, by the way, one of the reasons we had a crash in 29 was because the technology sucked. Literally, because the stock market itself, the exchange, oftentimes the stock prices during the crash were on the big board, were actually wrong. They were like hours off. The reason why, you remember when you see all those pictures, those famous pictures of people in 1929 standing outside the New York Stock Exchange, like on the covers of the newspapers? The reason thousands of people are there is because they've come down there to find out what's happening to their money, literally, because you couldn't find out. Yeah. And so today you have it on your phone. And the only reason I say that is I think people trusted the media then because it was the only thing you could trust.
Yeah, it was your path to information.
There wasn't 100 other places you could go.
There's this line in the book where one of the reporters says, quote, "Since becoming a journalist, I've heard the advice to believe nothing until it has officially been denied."
I love that.
I love that too as a journalist. Do you think there's truth in that?
Pretty much.
The public also, like, they have all these, they're suspicious of the media.
Right.
They could be suspicious. Oh, your book party, Andrew Ross Sorkin, you had these billionaires there. Therefore, are you in the pocket of... How do you think about that as you do your job? I mean, as you said, your friends are from high school. Journalists have no friends, famously, right?
Oh, you mean just...
Yeah.
How do I think about...
How do you think about like access, proximity, coverage?
Look, I think my job is to be the ultimate fair weather fan. So if you do something good, I am very happy to say attaboy. And if you do something bad, my job is to hit you over the head.
Yeah.
And that's the gig. And I do think that access to some degree is important. So insofar as being able to actually capture the nuance. I do want to know these people. Mm-hmm. I do want to know these people. I know, by the way, I also know journalists who don't want to know anybody.
Yeah.
They prefer to be, as far removed as humanly possible, to have no connection or relationship with that person. And by the way, I think there's a value to that too. So I think that you can have a big tent on this. But I think it's important, and I think that hopefully people respect and listen to some of the things that I report and say because I understand the nuance of the person's motivation or their incentive system. Yeah. So there's sort of, you can see it on both ends of it.
And disclosure is everything. It's like...
And I think disclosure is super important.
And also like the ethical standard you hold yourself to, because you know all this information about the markets, but you can't trade an individual stock.
I don't own any individual stocks.
If you did, do you think you would outperform Nancy Pelosi?
No, I'd probably screw it up. I mean, I have a running joke that actually the long-term policy of CNBC and the New York Times has probably advantaged me.
What would you have bought? Like, go back in time so you're not moving any markets.
So the
markets.
only thing that I was right about was when I think I was in middle school.
Jesus,
I told my father to buy Nike. And
really?
It was a great idea.
Oh, wow. Yeah. Did he?
And I think he did.
Oh, wow. Good for you. Yeah. When you go to Burning Man, when we have this epiphany on Burning Man, you're going to be, then you'll see what's coming next. Right. The barter system, all the stock.
There's lots of drugs involved.
Exactly.
Okay.
Do you think it's possible that all of these systems are just broken, like capitalism, media, the distrust is so high right now? Do you think capitalism is broken?
So I don't believe that capitalism is broken. I think that the current version of the way we're regulating it, managing it, handling it as a society is a little off kilter, and we need to sort of redirect it. That goes to tax policy. Yeah. That goes to some of the social safety net stuff, that goes to some of the rules of the road, that goes to some of the competition stuff. But I ultimately think that capitalism, much more so than I think any real effort at socialism over time, and I think I'm saying this almost empirically, like not as an opinion, seems to have been the more successful route.
Do you think some of these moves that Donald Trump is making, like 10% of oh my gosh, Intel, or a percentage of NVIDIA's sales to China to be determined, are those good movements in the capitalist system? I am more
in the Ken Griffin camp, who, by the way, is a Trump supporter historically, that these kinds of things typically end badly.
Okay. Rapid round of listener questions. Rebecca Shapiro, what will be the first sign of an AI bubble bursting?
The first sign of an AI bubble bursting will be some AI company, maybe not big, maybe small, that either announces that they're having to pull back on their spending in a major way. That might actually be the first sign. That'll be the first sign. Somebody announces that they're pulling back on spending in a big way, or that whatever their original plans to plans to build more data centers slows down. It'll look like that, and then it will cause a rethink.
Okay. A woman named Alexander Taylor Tots 05.
Okay.
When is the pop, and what do we do in the meantime besides go to Burning Man and get foot massages?
When is the pop? I think we still got a ways to go.
Okay. A Brooks brother. Is this farming subsidy a bailout? Will the farmers
Is Brooks brother from Brooks Brothers?
I don't know. He's a person who follows us on social.
Okay.
He said, I think it's interesting. It's Brooks' brother.
That's cool.
He's probably wearing balloon pants.
From Brooks Brothers.
Is this farming subsidy a bailout? Will the farmers sell their crops to the government or dump? I didn't even know about the farming subsidy, I have to be honest.
Well, there's a question about whether they're really going to get a subsidy. And there's also a question, by the way, about whether the Chinese are really going to be buying all these soybeans. I don't know if you've been following this.
Not at all.
So the president said that China has agreed to buy something like 12, 13 million metric tons of soybeans by the end of the year. It's the middle of December, and they've bought like 331,000 metrics.
Yes. Oh, yeah.
And so now there's a whole thing about, was it really the end of the year or the end of the growing season? And so
now we got to find out when soybeans grow.
We'll see about all of this.
Brendan Flutter, aka B Flood.
Hey, B Flood.
Hey, B Flood.
What's going on?
Asks a question about your friend Ken Griffin, friend.
Okay.
Be honest. Who is Bobby Axelrod of Billions based on? Ken Griffin, Steve Cohen?
So honestly, really not one person or even multiple people. And I know nobody wants to believe that. But when I was first starting to think about this is really in like 2011, before even some of the Steve Cohen stuff was happening. Now, as the show got closer to getting on the air, there were obviously lots of different people we were thinking about, just little. But I think of him as a singular character. Yeah. I've always thought that. And I think Brian and David, who are our showrunners and co-creators, they did an extraordinary job sort of making him singular. Okay.
Bell and Basket asked, who does your hair? I mean, really, this is...
I do my hair. I don't have anybody who does my hair.
Really?
I mean, get a haircut?
Yeah, just do your hair.
I get a haircut every couple weeks.
Okay. You want to shout out to the guy or just Dentist Torres that we're giving shout out to?
Her name is Asuko.
Oh, Asuko. Okay.
Yeah, she's great.
Apparently Bell and Basket likes it. Okay, quick lightning round. What the hell was happening at DealBook this year?
Which part?
Okay, Alex Karp, going wild, AI clip of him What is actually going...
It was not drugs. I just want to be clear about that.
You know for a fact?
No, I just have covered him. I've interviewed him so many times. He just was excited to be there.
What was going through your mind, though? Did you sense it was ridiculous?
No, I didn't sense it was ridiculous. This is the way he thinks, and this is the way he talks. I honestly, in all of those types of conversations, I almost try to put myself in their shoes. I have great empathy for whatever their position is. Mm-hmm. I honestly don't sit there in judgment the way I know the audience does.
Yeah, they really do. But I think it's just the meme moment. Did you know at that moment that would be a meme?
I'm not good at memes, so I don't know. I have kids; they're better at that.
Maybe in middle school when you bought Nike, it would be good. Okay, with all your empathy, did you feel empathy for Gavin Newsom when he was sitting in an uncomfortable position and the internet became concerned about the governor's testicles?
I have to say I totally missed that from the angle that I was sitting at here. I'm probably going to get this. I'll be a meme after this too.
When Halle Berry dissed Gavin Newsom, did you know that would be a newsworthy moment? You weren't on stage for that.
So it's funny. I wasn't on stage for that, and I was actually coming back in the back, and I thought, wow, that was something.
Yeah. Did you invite Donald Trump to DealBook this year?
I did not.
Would you like Donald Trump there?
Sure, I'd love to interview the president. I interviewed the president just over the summer on television.
But over the course of your career, you've had multiple interactions with him, or just?
Oh yeah, he used to come on Squawk Box.
Mm-hmm.
Oh my goodness, many years ago, maybe a decade and a half ago, when The Apprentice was on,
Mm-hmm.
he used to come on. We used to have a thing called Trump Tuesdays, where he would call into the show.
Yeah,
and we'd talk about real estate, the Kardashians, whatever was going on.
Didn't he once Truth Social something very angry about you?
Oh, more recently.
You're no good on TV, Andrew Ross Sorkin.
More recently, I had said something that he did not like. Yes.
And you repaired.
Have you ever repaired? You know, who knows?
Maybe he'll come to Burning Man too.
Maybe we'll bring the president to Burning Man.
Okay, who's the most surprising reader of DealBook or viewer of Squawk Box that
The
you
most
found?
surprising reader of DealBook. I remember being surprised that LeBron James reads DealBook.
Oh, I'm not surprised because I feel like he and Mav are such good business people.
Yeah, but I remember a couple years ago there was a deal or something, and somebody called me and they're like, "There's going to be this news story. Do you want to get an interview? He reads DealBook," and I was like, "Oh." No, I didn't know that.
I end every episode of Smart Girl Dumb Questions asking my guests who know so much, much more than me, what they are dumb about.
Yes.
Do you have such a thing?
I'm dumb about so many things. It's kind of crazy.
What's a question that you haven't asked out loud or you haven't bothered to figure out over 8 years of writing a great book about it?
So I'm uniquely dumb about music.
Oh.
So I grew up in New York listening to things like Z100. Do you know Z100?
It's a radio station?
It's like a pop radio station.
Okay.
Or like WPLJ 95.5. So when people talk about music around me,
Mm-hmm.
I'm like a dunce because I just have no idea about anything.
We have an episode for you.
Yeah.
With Jacob Collier.
Okay.
And he explains music.
He explains music?
Like rhythm, melody, harmony. Like I'm also a dunce about music. They gave me the triangle in world music class, and in Indonesian music class I had the gong because it was like a regulated one time per song
Did
situation.
you ever play an instrument?
The triangle and the gong.
That's it? Nothing? Okay. I played the saxophone in middle school, but was so worried that I was going to screw up the rest of the band that oftentimes I wouldn't blow into them.
Oh my gosh.
Because I was so scared that I was going to make the whole thing so terrible.
By the way, this like also puts your metaphor about Michael Lewis, like printing pages on a piano, playing pages of writing in such perspective for me.
There you go.
I have empathy for you.
Thank you.
And
I
because
need it.
I'm with you on that. Thank you so much, Andrew Ross Sorkin.
Thank
The
you for
book
having
is
me.
called 1929. It is excellent. I recommend it because I never have book people on the show, and it is great.
Thank you.
You can find him on Squawk Box on CNBC, on DealBook at the New York Times, and on the socials. Your Instagram is blowing up. Must be the haircut.
Got to go get a haircut. Thanks.
Thank you so much, Andrew.
Thank you so much. So you got to know. Then now at some point you have to tell me about the business of podcasting.
Yeah, I can tell you about it.
Yeah.
It is so weird how every one of my podcasts, even the ones about financial crises, end up talking about feet. Do you think my podcast is a foot fetish? Anyways, I love Andrew Ross Sorkin. He is so talented. I love this kind of storyteller he is and how nerdy he is. The fact that he spent 8 years kind of in the archives pulling together this book and the parallels it draws to today. I enter this conversation kind of dumb about financial crises and what causes them, having a sense of the headlines but less of the story. I left the book certainly much smarter about 1929, and I left this conversation much smarter about the underlying like similarities between all of these things, and with so many more questions about our hubris, the hubris of our markets, like the possibility of our government to actually regulate these, and also like really curious about the wild card that he talked about, sovereign debt, and this big game changer of how like the geopolitical world order, which is something I know something about, has to do with the financial order of things, which is something I know very little about. So tons of questions about that. I hope Andrew will come back on the show, but probably he's just busy at Burning Man getting a foot massage for the next year or so. But that's it for today's episode of Smart Girl Dumb Questions. I want to know what you think. Do you think that the AI bubble is about to burst? Do you think crypto is frothy? Do you think the wild card situation is going to come true? What are your dumb questions? Send them all to me. I'm Nayeema Raza101@gmail.com. You can leave a comment below. You can call our hotline at 1-855-MY-DUMB-Q and leave me a voice note, and your question could be on the show. Today's episode was produced with Desta Wonderad of Wonder Studios and Melissa Lee Gibson, and mixed and engineered by the awesome Johnny Simon. Our theme music is by David Kahn. Special thanks to Claudia Riccardi and Healy Cruz. I'm Nayeema Raza. See you next week on Smart Girl Dumb Questions.
I'm just worried I'll never be able to write another book again.
What is? I think I loved at the end of the book. It's like no part of this book may be used as artificial intelligence.
Yeah, but because AI was too late for me for this book. But my only point is, I feel like in 5 years from now, people will there'll be bajillions of books because you just write it with AI.
I don't know. You had the archives. I think that archival sensibility.
Yeah, but by then, people will have somehow find a way to digitize half the stuff.